All right. ECB interest rate decision coming up. 36 seconds. Today. Bitcoin's bullish structure weakens, eyeing $100,000 on falling retail demand. ICYME. NY Fed survey found most firms passed through tariffs to their customers.
Forex Live European FX News Wrap. Currencies little changed while silver jumps, ECB up next. Mexico consumer confidence day increased to 46.7 in May from previous 45.3.
Mexico consumer confidence up to 46.5 in May. All right, let's see what's coming up. What do we got? Crypto today. Bitcoin's bullish structure weakens, eyeing 100. All right, interest rates kept the same as expected. Cool. And so the press conference is coming up at 8:30 in 8:45. So we're just going to fart around until then, and then we're going to put it in cruise control and listen to the press conference. Are you guys okay with that? You're like, oh, for show. Oh, for show, Wayne. Hey, and if you're in TRADARS and you're like, where's the thing? There's the thing. There you go. So we'll get an update here, and then we'll go through the rest of the sentiment, although it's already back. It's pre-information. So maybe we'll just jump to the fundamentals for a little bit. We'll do some technicals, but the press conference is the big thing. And then, of course, tomorrow, I'll be at FX Street tomorrow for Trade Non-Farm Payrolls Live. The 230th month in a row. Hey, I think we can call that a trend now, huh? Yeah, pretty soon it's going to be a trend. So there you go. And if you're not in the know, today's press conference is easy because the first question in the press conference to Christine Lagarde will be if she's going to quit. Ha ha! Quit early. Ha ha ha! 2.5 years early. Oh la la! Really? Au revoir, Lagarde. Or if you're from Paris, à plus. Smell you later, Chrissy. Yeah. Huh? But to me, she'll always be Madame Lagarde. Yeah. So anyway, so that's what we got going here. We have some data coming up at 8:30. Balance of trade out of Kenyatta. I was listening to Smith, who's the premier of Alberta, and she was talking about the new tariffs on steel and aluminum. And it was just interesting, and she's like, well, we're the ones with the bauxite, not you. I'm like, cool. Yeah, neat. So it was really interesting. I don't get a lot of Canadian news. I suppose I can bring up CNBC, not CNBC, CBC. I have it on my machine behind me, but I guess I need to do more of that. Congratulations to the Oilers. I knew it wouldn't be close. I knew it'd be a blowout. Edmonton easily won in the 19th minute of sudden death overtime. Oh my God. But hey, Better than going 0-3 or whatever, right? Last year, huh? Losing that many games, not cool, man. So to start the year, that's great. It's great. Cool. And if things go as planned, I'll be in the City of Champions the day they win the Stanley Cup, and I hope they win it at home. Yeah. Yeah. Boy, would that make Canada happy, huh? Cool. A little surprised we haven't got an update on the feed yet on the ECB news. It's not us, it's them. Yeah. Well, I'm asking a lot, Adam. I'm asking for them to win and win while I'm in Edmonton. But why not? Gonna ask. Ask, right? Never hurts to ask. Come on, Edmonton, please do it. All right, so I thought we'd get an update by now. Strange. Let me refresh. Maybe because I turned. Oh, here we go. Breaking. ECB cuts key rates by 25 basis points in June as expected.
Eurozone ECB main refinancing operations rate meets expectations.
Yeah.
2.15%. Eurozone ECB rate on deposit facility meets forecasts. 2%. ECB cuts key rates by 25 basis points in June monetary policy decision, as expected.
UK car market returns to growth, SMMT. Bay Street likely to open on cautious note, resources stocks may move up. Cool. So all that came out recently. Okay. So, yeah. So anyway, so we got it down to 215. Congratulations, everybody, because we got it right. ECB. Okay. Yep. So we've talked about this, talked about it. Okay. And boom, boom, boom. So here we are, 2.15. By the way, it said this yesterday and the day before and the day before that 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 and the day before that. And my wild and crazy prediction, all else being equal, check it out. It's going to stay the same till the end of the year. Oh, cool. Nice. So here we are. First quarter, second quarter. Cool. Second quarter, third quarter. Third quarter, fourth. So somewhere, October, November, December, there's a cut. And then a hold. Now, what kind of strange, fuzzy logic, mathematical, artificial intelligence, neural network, time machine are we using? This is what the ECB is telling us. I'd just like to be plugged into the ECB's database. Oh, cool. That's a good idea, Wayne. Of course it's a good idea. So you knew this yesterday, the day before that, this has been like this, I think, all year. I think maybe the back half has changed, but not the front half. So anyways, and here's the thing. Now we get inflation to 1.9. This is the issue today. Inflation used to be 2.2 in Europe. Am I correct on that? Of course I'm correct. You have to remember these things. You have to know these things. So it was 2.2. Now it's 1.9. Magically, that is the number that allows Lagarde to quit and keep face, save face. Sorry, my English not so good. Okay. And then inflation's going to go back up. But she'll already be gone. And she's like, well, I got it down to 1.9. I don't know. This new dude ruined it. Good time to quit, huh? Quit while you're winning. Yeah. 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 I want to be a mafia. Yeah. Yeah. Anyways, I got to get back into those things, but I don't know. But that will be one of those things I'll remember forever. You know, the Cato drums and the cool lighting. It was like purple and green and orange, and mood lighting in this huge room with people in suit and ties. I think I had a San Jose State sweatshirt on. No, I probably had a button up. I've always liked button ups. I'm a buttoned up dude. Well, all these institutions have their different personalities, right? So I don't know the personality of the WTF. I'm sort of naive on a lot of these things. Like, are they crazy radical liberal lunatics, or are they crazy radical Republican lunatics? I don't know these things, and you kind of have to know this when you get to Washington D.C. because there's so many think tanks. Like, oh, I want to be part of. I don't know. I'll make up a name. Oh, the Pew Charitable Trust, and you're like, oh, that's radical, crazy, liberal, lunatic stuff. And I'm like, really? Because they just seem like cool people doing a cool thing, and you're like, well, you have to know these. So, and I don't. So I don't know if the World Economic Forum is one or the other. But I have been doing an event, and I do like anything to do with international cultures. I like international experience. I like meeting new people from places. I like trying different foods. I like listening and learning about different religions. And, so I've always been attracted to that. Anything with a globe, you'll find Wayne there. And they had a globe, so somehow I got involved. Yeah. Right? So, yeah. Yeah. So I might have an opportunity, in fact, to work with the university in Africa to help advise the management of their endowment. And I'm like, oh my God, well, maybe I'll go there and visit, do it in person. And a lot of people would not be that way. You're like, oh my God, I would never go there. I think I'll just do it from Zoom. I'm like, no, let's go. Let's go. Yeah. So the first thing I did is I looked up the university. I'm like, yeah, okay, there's a real need here. This university needs help. I'm able to help. I will help. So they're like, let's set up a meeting. Yeah, good. Let's set up the meeting. By the way, I'll do it for free. Let's just get past that. You need help. I can help you. So let's do it. But yeah, let's talk. Let's talk. By the way, I'll do it for free. So let's talk. Yeah. So, anyways, that's my point of view. And am I a radical? What am I, a crazy radical liberal right nutcase? Am I radically right? No, but I'm definitely not radically left. So anyway, so we knew all of that. Tomorrow we got non-farm payrolls. Here's our jolts. Ooh la la. Okay. Here's our claims, which will be coming out in 30 seconds. You know what? Let's get back to that. Let's get claims live. 4 seconds. Look at that.
Yaw and R pulls back from 86 Noel. As the U.S. dollar softens, RBI rate decision in focus.
Gold extends gains ahead of ECB rate decision, U.S. jobless claims, and trade talks.
Breaking, ECB cuts key rates by 25 basis points in June as forecast.
247.
FM enhances trader education with in-depth market analysis and live social media insights. About 2,000 gallons of diesel spills in Baltimore waterfront, U.S. officials say.
247.
Breaking, ECB cuts key rates by 25 basis points in June as expected.
Whoa.
Eurozone ECB main refinancing operations rate meets expectations.
Oh my God.
2.15%. Eurozone ECB rate on deposit facility meets forecasts, 2%. ECB cuts key rates by 25 basis points in June monetary policy decision, as expected.
Crypto today. Bitcoin's bullish structure weakens, eyeing $100,000 on falling retail demand.
Oh my God. That's nutso. Anywho, this really makes this zone between the 21 and let me show the sell zone on this time frame. Which once again we talked about this for almost the full hour yesterday of the probability of something like this potentially setting up. Okay. So anyways, I'd even have it higher. What time frame do we have this? Daily. Let's go weekly and double check that. No, it's still not right. Okay, we'll go back to daily. Or how about just for fun? No, we'll leave it there. We'll leave it there. Daily. Okay. So what we talked about yesterday is I asked you to look at seasonality. Okay. And I asked you to prepare. You remember I actually wrote this? I said, if you were a bear. I don't know if you're a bear. So you have to do your economic research, which is the whole point of TRADARS. I said one of the things you can look at is seasonality. And then we talked about a window. Remember, that's what this vertical line is. You may believe, we call that bias, that somewhere between yesterday and this line in the sand, that this asset drops. I said it'll change the way you interpret what's going on here. But that's how a bear would look at it. Now, should you be a bear? That's up to you, dude. You have the data, make a decision. But at some point, even if you're a bull, you have to understand the game strategy of your opponent. You can't just be great at offense and suck at defense. So you have to understand your strategy, but their strategy. All right, so bulls, what do? Let's clarify. Okay? Bulls are trying to buy it off this zone here. That's why it's a triangle, bro. Oh, you don't know how to trade triangles? Well, first of all, it shows consolidation. But you should also be able to do, moving average analysis. So that's two things. You should be able to do price action. And then, of course, now if you're doing pivots bullish, you have all that lined up. So there's about 5 things to do here that all say the same thing if you're a bull. We just don't know if it's going to go up now. That news was nasty. Okay, great. But if you are a bull, you should understand what your strategy is. There's no doubt here. Okay? The biggest thing about this setup for bulls has to do with the potential for change in direction or change in probabilities of up from favorable to less favorable or not favorable at all. This is why I keep asking you. You have the tools at traders.com. Just look it up. In like 10 minutes, you'll know if you're short-term long and long-term short, or long-term or short-term long and long-term long. You'll be knowledgeable. You see? You're the one that should be knowledgeable. You have the tools. So, for example, I was talking with somebody who was talking about somebody else who was, and all good things, not rumor, bad, but just sort of this younger person at the office, let's say, was using somebody else in the office to get information, like, hey, how do you do this? And hey, how do you do that?
United States unit labor costs came in at 6.6%, above expectations at 5.7% in 1Q. United States goods trade balance climbed from previous 87.62B to 87.4B in April. United States continuing jobless claims came in at 1.904M, below forecasts, 1.91 Ma in May 23rd.
Canada April trade balance, $7.14 billion versus $1.50 billion expected. Canada international merchandise trade came in at 714B, below expectations, 1.5B in April.
United States initial jobless claims came in at 247K, above expectations, 235K, in May 30th. Canada imports down to 67.58B in April from previous 70.4B.
Futures suggest to open broadly up.
Wow. Okay, that wasn't an update, by the way. All that news, all those headlines just came out in the last couple of minutes, like literally 2 minutes. You couldn't even read as fast as we're collecting the news through my Squawk Box. Cool. Anyways, going back to this thing, if I was mentoring this person, I say, look, you're young and it's good to ask for help. I said, but what I would suggest is in the long run, you want to be the one that gets promotion. You want to be the one that gets the raise. You're the one that you want to be the one that somehow management says you should get the extra training. So I said, the way you do that is instead of asking sideways for information that you don't know, so you need to be the one that is able to get the information. You see? So you should figure it out so you know. So if somebody says, hey, I need your help, I need you to do such and such task, and you don't know, well, the first thing you should do is ask up. Get everybody in the management or leadership roles above you, get to know you because you're always asking good questions. You're like, hey, can you run me through this? I want to know. I want to be an expert in this situation. They're like, oh, yeah, let me tell you. Now they know that you know. But you also have like artificial intelligence, right? Like, dude, ChatGPT it, Google it. I don't know, figure it out. Instead of asking someone that may or may not actually know the answer, that makes them the expert. You should figure it out. Same thing. It's like you don't need a YouTube guru. Like, how embarrassing is that? Some loser on YouTube makes decisions for you? That's terrible. It's embarrassing. But instead, you have the tools to do your own research and make your own opinion. That's what I want from you. That's what I want for you. So, for example, we have all of this. This is all what bulls are thinking, but I've showed you what bears are thinking, and we covered that for about at least a half an hour yesterday. But one of the other things I said is go back to the January presentation I did about the analogous period and look at what happened last time, something similar to our current trade war scenario, and see what happened that summer. And know that. You're like, oh my God, but Wayne, I'd have to go back and watch the video. Uh-huh. I have it in a PowerPoint, huh? Yeah, I don't remember what it's called or where it's located, which is funny, but I found the flashcard. Yeah, so I can't even, it's probably on my laptop. I can't even find the presentation. Oh no, I found it. I don't know which version. I had like 10 versions. But the thing is, can you do the research? Do you have the data? Yeah, this is one of the versions I made. Do I have the data? And yeah, look at all these slides, man. So what happened last time? Okay. Yeah. So go back and think about it, because I go year by year by year by year by year. Cool, right? Look at this, man. Cool. Fed hikes. Tariffs announced. Fed cuts. Pandemic. U.S. weekly initial jobless claims rise to 247K versus 235K expected.
U.S. trade deficit cut in half in April on plunge in imports from Trump tariffs.
Okay. So anyways, how far away? Oh, we got to get ready for the ECB meeting. What do we think about USD Rand? Just log into TRADARS, pull it up, and you'll know. I can answer probably 27 different aspects of that, but we have all the data. Assuming we have Rand, I know we have some technical stuff and some fundamentals. I don't know if we have the full page. I think we do, though. Okay, let's go to Europa. Ba-ba-ba-da-da. Europa. Ba-ba-boo-boo. Oh, my God. Getting stuck. All right. Europa. Do-do-do-do-do. Do-do-do-do. Do-do-do-do. They don't even have it? Huh. That's kind of lame. There we go. There's the press release. And we'll do the pressy. Maybe the volume's better. No, it's still YouTube. All right, how does that smell? Remember, the first question after the speech. Yes, I do use AI a lot, but not for opinions. I'm very opinionated. I'm not necessarily bearish on Japanese yen. No, that is not true. And in particular, I would be very bullish soon, once again, based on seasonality. All right. Wait. Yeah, there we go. I thought I lost microphone. All right, so remember, after the speech, I want the first question to be, Madame Lagarde, are you going to quit? So let her reread the press release, and then we'll gather to hear the question and answer period. In the meantime, I'm going to reload on the coffee. Please enjoy.
Good afternoon and welcome to our press conference with President Lagarde and Vice President de Guindos. And my name is Wolfgang Preußel. We have journalists participating online, so when I give them the floor, please turn on your camera and your microphone. And with that, I hand over to President Lagarde, please.
Thank you very much, Wolfgang, and good afternoon to all of you present, and good day to all those who are online from somewhere in the world.
ECB press conference. Lagarde speaks on policy outlook after cutting key rates by 25 basis points.
I welcome you
U.S. labor productivity slumps much more than previously estimated in Q1.
To lower
U.S. trade deficit narrows,
ECB
much more than expected
by
in April.
25 basis points. In particular, the decision to lower the deposit facility rate, the rate through which we steer the monetary policy stance, is based on our updated assessment of the inflation outlook, the dynamics of underlying inflation, and the strength of monetary policy transmission. Inflation is currently at around our 2% medium-term target. In the baseline of the new Eurosystem staff projections, headline inflation is set to average 2% in 2025, 1.6% in 2026, and 2% in 2027. The downward revisions, compared with the March projections by 0.3 percentage point for both 25 and 26, mainly reflect lower assumptions for energy prices and a stronger euro. Staff expect inflation, excluding energy and food, to average 2.4% in 25 and 1.9% in both 26 and 27, broadly unchanged since March. Staff see real GDP growth averaging 0.9% in 25, 1.1% in 26, and 1.3% in 27. The unrevised growth projection for 2025 reflects a stronger than expected first quarter, combined with weaker prospects for the remainder of the year. While the uncertainty surrounding trade policies is expected to weigh on business investment and exports, especially in the short term, rising government investment in defense and infrastructure will increasingly support growth over the medium term.
I love that
real
blazer.
Incomes and a robust labor market will allow households to spend more. Together with more favorable financing conditions, this should
Notice
make the
that
economy
she's not wearing her
more
blue
resilient
glasses
to
anymore.
global shocks. In the context of high uncertainty, staff also assessed some of the mechanisms by which different trade policies could affect growth and inflation under some alternative illustrative scenarios. These scenarios will be published with the staff projections on our website. Under this scenario analysis, a further escalation of trade tensions over the coming months would result in growth and inflation being below the baseline projections. By contrast, if trade tensions were resolved with a benign outcome, growth and to a lesser extent inflation would be higher in the baseline projections. Most measures of underlying inflation suggest that inflation will settle at around our 2% medium-term target on a sustained basis. Wage growth is still elevated, but continues to moderate visibly, and profits are partially buffering its impact on inflation. The concerns that increased uncertainty and a volatile market response to the trade tension in April would have a tightening impact on financing conditions have eased. We are determined to ensure that inflation stabilizes sustainably at our 2% medium-term target. Especially in current conditions of exceptional uncertainty, we will follow a data-dependent and meeting-by-meeting approach to determining the appropriate monetary policy stance. Our interest rate decisions will be based on our assessment of the inflation outlook in light of the incoming economic and financial data, the dynamics of underlying inflation, and the strength of monetary policy transmission. We are not pre-committing to a particular rate path. The decisions taken today are set out in a press release that is available on our website. So I will now outline in more details how we see the economy and inflation developing, and will then explain our assessment of financial and monetary conditions. The economy grew by 0.3% in the first quarter of 2025, according to Eurostat's flash estimate. Unemployment at 6.2% in April is at its lowest level since the launch of the euro, and employment grew by 0.3% in the first quarter of the year, according to the flash estimate. In line with the staff projections, survey data point overall to some weaker prospects in the near term. While manufacturing has strengthened, partly because trade has been brought forward in anticipation of higher
cost
tariffs,
millions of people their jobs?
the more domestically oriented services sector is slowing. Higher tariffs and a stronger euro are expected to make it harder for firms to export. High uncertainty is expected to weigh on investment, but at the same time, several factors are keeping the economy resilient and should support growth over the medium term. A strong labour market, rising real incomes, robust private sector balance sheets, and easier financing conditions, in part because of our past interest rate cuts, should all help consumers and firms withstand the fallout from a volatile global environment. Recently announced measures to step up defence and infrastructure investment should also bolster growth. In the present geopolitical environment, it is even more urgent for fiscal and structural policies to make the euro area economy more productive, more competitive, and more resilient. The European Commission's Competitiveness Compass provides a concrete roadmap for action, and its proposals, including on simplification, should be swiftly adopted. This includes completing the Savings and Investment Union, following a clear and ambitious timetable. It is also important to rapidly establish the legislative framework to prepare the ground for the potential introduction of a digital euro. Governments should ensure sustainable public finances in line with the EU's economic governance framework, while prioritizing essential growth-enhancing structural reforms and strategic investment. Looking at inflation, annual inflation declined to 1.9% in May, from 2.2% in April, according to Eurostat's flash estimates. Energy price inflation remained at minus 3.6%. Food price inflation rose to 3.3%, from 3% the month before. Goods inflation was unchanged at 0.6%, while services inflation dropped to 3.2% from 4% in April. Services inflation had jumped in April mainly because prices for travel services around the Easter holidays went up by more than expected. Most indicators of underlying inflation suggest that inflation will stabilize sustainably at our 2% medium-term target. Labour costs are gradually moderating, as indicated by incoming data on negotiated wages and available country data on compensation per employee. The ECB's wage tracker points to a further easing of negotiated wage growth in 2025, while the staff projections see wage growth falling to below 3% in 2026 and 2027. While lower energy prices and a stronger euro are putting downward pressure on inflation in the near term, inflation is expected to return to target in 2027. Short-term consumer inflation expectations edged up in April, likely reflecting news about trade tensions. But most measures of longer-term inflation expectations continue to stand at around 2%, which supports the stabilization of inflation around our target. Turning now to our risk assessment. Risks to economic growth remain tilted to the downside. A further escalation in global trade tensions and associated uncertainties could lower euro area growth by dampening exports and dragging down investment and consumption. A deterioration in financial market sentiment could lead to tighter financing conditions and greater risk aversion, and make firms and households less willing to invest and consume. Geopolitical tensions, such as Russia's unjustified war against Ukraine and the tragic conflict in the Middle East, remain a major source of uncertainty. By contrast, if trade and geopolitical tensions were resolved swiftly, this could lift sentiment and spur activity. A further increase in defense and infrastructure spending, together with productivity-enhancing reforms, would also add to growth. The outlook for euro area inflation is more uncertain than usual. As a result of the volatile global trade policy environment, falling energy prices
Lagarde's speech.
and a stronger
Survey
euro
data point to
could
some
put
weaker
further
prospects
downward
in near
pressure on
term.
inflation.
ECB's
This
Lagarde.
could be reinforced
The
if
services
higher
sector
tariffs
is slowing.
led to lower
U.S.
demand
President
for euro
Trump
area
and Chinese
exports
President Xi hold
and
phone
to
calls.
countries
Xinhua.
with overcapacity
Euro-US dollar
rerouting
price
their
forecast.
exports
Bulls
to the
taking
euro
their
area.
chances amid ECB soft
Trade-
U.S. data. Trump and Xi hold a phone call.
Tensions could lead to greater volatility and risk aversion in financial markets, which would weigh on domestic demand and would thereby also lower inflation. By contrast, a fragmentation of global supply chains could raise inflation by pushing up import prices and adding to capacity constraints in the domestic economy. A boost in defense and infrastructure spending could also raise inflation over the medium term. Extreme weather events and the unfolding climate crisis more broadly could drive up food prices by more than expected. Let's look at the financial and monetary conditions. Risk-free interest rates have remained broadly unchanged since our last meeting. Equity prices have risen, and corporate bond spreads have narrowed in response to more positive news about global trade policies and the improvement in global risk sentiment. Our past interest rate cuts continue to make corporate borrowing less expensive. The average interest rate on new loans to firms declined to 3.8% from 3.9% in March. The cost of issuing market-based debt was unchanged at 3.7%. Bank lending to firms continued to strengthen gradually, growing by an annual rate of 2.6% in April after 2.4% in March, while corporate bond issuance was subdued. The average interest rate on new mortgages stayed at 3.3% in April, while growth in mortgage lending increased to 1.9%. In line with our monetary policy strategy, the Governing Council thoroughly assessed the links between monetary policy and financial stability. While euro area banks remain resilient, broader financial stability risks remain elevated, in particular owing to highly uncertain and volatile global trade policies. Macroprudential policy remains the first line of defense against the buildup of financial vulnerabilities, enhancing resilience and preserving macroprudential space. So in conclusion, the Governing Council today decided to lower the three key ECB interest rates by 25 basis points. In particular, the decision to lower the deposit facility rate, the rate through which we steer the monetary policy stance, is based on our updated assessment of the inflation outlook, the dynamics of underlying inflation, and the strength of monetary policy transmission. We are determined to ensure that inflation stabilizes sustainably at our 2% medium-term target. Especially in current conditions of exceptional uncertainty, we will follow a data-dependent and meeting-by-meeting approach to determining the appropriate monetary policy stance. Our interest rate decisions will be based on our assessment of the inflation outlook in light of the incoming economic and financial data, the dynamics of underlying inflation, and the strength of monetary policy transmission. We are not pre-committing to a particular rate path. And in any case, we stand ready to adjust all of our instruments within our mandate to ensure that inflation stabilizes sustainably at our medium-term target and to preserve the smooth functioning of monetary policy transmission. We are now ready to take your questions.
And the first question goes to Mark Schröers of Bloomberg. Mark, please.
Yes, thanks a lot for taking the questions. The first one is on rates. Has anyone today advocated either pausing rate cuts or cutting by a bigger 50 basis points? And would you say that after today's rate cut to 2%, a pause at the next meeting in July would make sense, also to wait for new projections in September? And the other one is not on the future of rates, but on your own future. WEF founder Klaus Schwab had said that you discussed leaving the ECB before the end of your term to lead the World Economic Forum. I know the ECB stated your determination to stay, but without an outright denial of these talks. So have these talks taken place or not, and have you contemplated leaving the ECB early? Thank you.
Thank you for your two questions, and I'll start with the first one, which is really the order of business and the main topic today. So we cut interest rates by 25 basis points. And with today's cut at the current level of interest rates, we believe that we are in a good position to navigate the uncertain
Russia's central bank reserves dollars climbed from previous 678.5 B to 678.7
to navigate those circumstances.
German manufacturing orders rise
I
unexpectedly.
can also tell you that it was
U.S. stocks
an
may lack
almost
direction
unanimous
ahead of
decision.
monthly jobs report.
There was one governing council member who did not support the decision, but other than that, it was virtually unanimous. So I would call it either very broad consensus or virtually unanimous support for the decision to cut by 25 basis points. And obviously, we analyzed the situation in the light of the three criteria that you know well, because they are repeated several times in the monetary policy statement and have not varied for a number of meetings now. But under those three criteria, really the situation points towards inflation settling at our 2% targets. We can come back to the path, but this is what we are seeing, and that is what has predicated the cut that we made today. Now, you asked me about my future, which is far less important than the future of the economy and the future of our monetary policy, rest assured. But I can very firmly tell you that I have always been, and I'm fully determined to deliver on my mission, and I'm determined to complete my term. So I regret to tell you that you're not about to see the back of me.
Next question goes to Annette Weisbach of CNBC. Annette, please.
Hi, President Lagarde. I have a question. When I read through the communiqué today, I have the feeling that you're quite confident on the economy despite all the uncertainties. So is that a right assessment? And at the same time, you're also quite confident that inflation is under control. So does that bring me to the right conclusion that we're almost done when it comes to rate cutting? And then a question on your thinking about the boost from the fiscal space, because clearly it will take time until we'll see that materializing on the economy and also probably on inflation. So just to also understand,
is that
why
right?
are you so
There we go.
confident that this
Thank
is
you,
actually
Denise.
supporting the economy also in the shorter term, despite all the uncertainties? Thank you.
Well, thank you so much for your question.
I was just saying she was a little bit
have hardly
sassy with that
revised,
answer, huh?
Our growth numbers. So the only year where we have slightly revised is 2026, and by 0.1%. So we have confirmed our projected growth rate as per our projection of last March at 0.9% for 2025. And that was certainly reinforced by the number we had for Q1. So I mentioned the 0.3 Q1 number, which was, as you know, revised from an initial 0.4, I wouldn't expect, I would not exclude that there be further revision of that number on the upside. Now, this is attributable to multiple factors. It's improved consumption, it's improved investment, but more importantly, it's the buildup of inventory or anticipated purchases and therefore sales in fear and anticipation of the tariffs. So that Q1 is, of course, very peculiar.
All right, if you're happy that we're watching this together, please click that thumbs up button.
Momentum to the growth that we are seeing and anticipating for 2025. But again, I would not exclude that number of...
Remember, I'm going to be red flagged by streaming this.
Given the volume that we are seeing being traded out of some countries in particular. But we are not revising 27, and we are very marginally revising 2026 because there is a carryover, number one, and because we believe that the impact of tariff, if and when they materialize, on the export that we have towards the United States, which I remind you is only 17% of our total exports outside from the euro area and European countries, will impact predominantly on 26 and will then be significantly offset by the expected investment in both military equipment and construction, or infrastructure, if you will, particularly out of some countries. So our assessment is that that will have a bearing on 27 predominantly, some in 26, but predominantly in 27. So you have this offset between the two. So are we confident? I think that would be far-fetched, because we are in a good place. As I said, I think we are well positioned as you know, after that 25 basis point rate cut and with the rate path as it is. We are in a good place. We will face uncertainty. We do not know what the outcome of the negotiations will be between the various partners. We don't know the level of retaliation that might be decided, which incidentally is not included in our baseline, as you will see published later on. And as a result, we have to be prepared, and we will be assessing meeting by meeting data as they come in. But, you know, as I said again, we are well positioned at the moment. And the path of inflation that we see certainly returns to 2% in 2027. So we start from a place where we have inflation for 2025 at 2%. It goes below target in 26 for reasons that have predominantly to do with the price of energy and the value of the euro. Because, as you know, it's based on our current assumption of those prices now. And that's what explains these numbers.
Next question, Francesco Canepa of Reuters. Francesco, please.
Thank you very much. Good afternoon.
Good afternoon.
So you said that the current level of rates leaves you in a good position.
Mm-hmm.
Are we to understand that as an indication that you're done cutting interest rates? Or, if I can rephrase the question in another way, what would you need to see for you to cut rates again?
Again, we are in a good position. And we are in a good position.
I mean, I don't think you need to cut below 2%.
Cuts that we
Gee
decided,
whiz, those are low interest
so that
rates.
we can face the uncertainties that are coming our way. But as you have heard in the monetary policy statement, we will decide meeting by meeting on the basis of data. And we will assess, as and when data come in, whether or not that position is secure in order to deliver on our 2% medium-term target. What I'm saying today is that we are in that good position.
15 minutes to the stock market open.
Next question to Aude Kersulek of BFM Business. Aude, please.
Thank you, President Lagarde, for taking my question. First question, would you say the monetary stance has now shifted to neutral, or is it still restrictive, even slightly? And second question, some countries are facing higher debt and may struggle to attract investors. At what point does that become a concern for the ECB in terms of policy transmission and financial stability? Thank you.
Well, thank you for your two questions. We have not discussed this wonderful concept of the neutral rate on the occasion of this meeting. And I think that we all know well that as we are getting closer to that zone, we need to be particularly attentive. We need to be confident in our resolve to deliver with the appropriate monetary policy our medium-term 2% target. But we have not discussed that neutral rate.
So, Richard, it's 100% dollar weakness. It has nothing to do with euro.
The neutral rate is predicated on the absence of shock. Great equilibrium, no shock. Well, I wish.
Remember, I'm a perma bear on Swiss franc.
But we have just nearly concluded a cycle of monetary policy that dealt with a series of shocks. Pandemic, war in Ukraine, energy crisis. And I think we have done that decently well. Inflation is at target 2% medium term. We are currently around 2%. Expectations are well anchored around 2%.
No, this is 100% related to
I told you repeatedly over the conferences
weekly jobless
was
claims.
Of concern to us, namely
this is about Fed cutting interest rates.
Evolution of wages, evolution of profit. Those three elements are coming really in line with.
So the ECB is done.
Projections where in order to
the Fed is
deliver
next.
2% medium
That's
term
what this
target.
is about.
For the moment, we are facing significant uncertainty. You will read in the material, in the monetary policy statement, I think we quote uncertainty 9 or 10 times. It abounds. There is plenty of that. And clearly we are trying to improve our game as much as we can in order to anticipate, measure, caliber, but it's proving obviously quite difficult. And that's the reason.
So here's our long position from 2 weeks ago.
Projection exercise, but also the scenarios which encapsulate some of the channels of transmission to growth and inflation. Some of them, not all of them. In particular, I would mention one that we
That's
discussed
the
quite
swing
extensively
trade
during
from
the
a
Governing
week
Council,
ago.
which is the disruption of the supply chain. That is not included in any of our scenarios.
And the next question goes to
But we have one more ECB cut
Svein Iljan
on the
of
books, though.
Bulgarian newswire BTR.
Ah, welcome.
Thank you.
I hope all your colleagues have welcomed you to the circle.
I hope to. According to the ECB convergence report published Wednesday, Bulgaria is ready to join the Eurozone on the January 1st next year.
Yeah, but it's yen and Swiss franc, not euro. Euro's not strong.
Euro area, and will the currency zone be stronger with the likely new member state?
So first of all, I would like to congratulate Bulgaria, the Bulgarian people,
ECB press
and welcome
conference.
them. This is not
Lagarde
yet
comments on policy outlook after cutting key
decision-making
rates by
process, because, as you
25
know,
basis points.
While the Commission
Lagarde speech.
and us
We are in a
have
good place
validated
after
under the
25
convergence
basis
report
points rate cut
that
today.
the criteria are met, the European Council still has to
Okay,
approve.
now
I
it's
don't want
strong.
to
Okay.
prejudge what the European Council will decide, but there is a very strong likelihood that Bulgaria will become our
Okay, now it's
21st
strong.
member
Good.
around the table.
Good, good,
And
good.
we are delighted that the circle gets
Pound is
larger,
weak, Aussie's
and,
okay.
we will be looking forward to the Bulgarian contributions, both in terms of intellectual input, economic analysis, monetary policy determination, and as soon as the decision is final with the European Council, as you probably know, we will welcome for several meetings before January 1st the Bulgarian representative at the table of the Governing Council in order to sort of facilitate and do the onboarding properly, and so that we can also get to know a new colleague. I also hope that the Bulgarian people will value the solidity of the euro area, the solidity of the currency that we have. Some of you have probably noticed that the supportive judgment of the Europeans has gone up and is now at 83%. So you have 83% of the Europeans, based on a survey that is done on a regular basis, 83% actually value and appreciate the euro as their currency. So I hope we can together do everything we can so that Bulgarians can also appreciate the value and the shield impact that the euro constitutes for new members.
And the next question goes to Stefan Recchius of Handelsblatt. Stefan, please.
Thank you very much for the floor. First question is, some analysts have entertained the idea that you could skip July to make a concession to those governing council members who have already become reluctant to cut rates further. Could you walk us through today's deliberations in this light?
So he doesn't know the
My
future.
second question is, you have been reluctant to declare victory over inflation for quite some time.
Let me show you what he doesn't know.
Is this the right time for a victory lap? And if not, why?
Yeah, victory laps are always nice, but there is always another battle. So, as I said, I think that with today's cut and the current level of interest rates, number one, I think we are getting to the end of a monetary policy cycle that was responding to compounded shocks, including COVID, including the war in Ukraine, the illegitimate war in Ukraine, and the energy
So he
crisis.
doesn't know this.
But of course, we are now into a different time with different players, with different partners, with different policies. And we will continue to analyze and assess and measure.
So he just
and make
asked,
sure that we deliver
does this mean you're
on
not going to
our
cut in
2%
July?
medium-term target. This is.
They've already told us they're
in
not.
a way the thing that is certain. You should not.
He
doubt
doesn't
for a
know.
second
We know.
Our determination to deliver, with the appropriate monetary policy, the 2% medium-term target. What we're seeing currently, with this, 2% projected inflation for 2025, around 2% for 2027, and 1.6 in 26, caused predominantly with our current assumption on the price of energy and the value of the euro. We have a good path to this target, and we'll make sure that we I don't mean to use the word oscillate or navigate, but it will be, close navigation around our target. That's where we have to be and want to be.
Next question to Olaf.
They just
Storbeck
don't
of
know.
Financial Times. Olaf, please.
They're not doing their job. They should know. This is just data
Thanks.
from the
My
ECB.
first question is on this concept of the direction of travel, which you earlier used in this rate cycle. Your today's remarks suggest to me that the direction of travel now probably is more a sideways movement rather than kind of a downward as it was by the end of the year. Would that be the right takeaway from your today's remarks? And my second question again is on these remarks by Klaus Schwab of the World Economic Forum.
He reminds me of Winnie the Pooh.
Suggest that the disclosure that you considered leaving the ECB early could undermine your ability to do your job properly, as you might be seen as a lame duck. What would be your response to those concerns? Thanks.
Thank you for your two questions. On the first one, the reason I use the direction of travel concept was when we were really at a distance from our medium-term 2% target. So to talk about the direction of travel, when we have our medium-term 2% target in sight, sustainably so, when underlying inflation is not budging. So for those in doubt, headline inflation in 2026 is clearly oil and gas and the value of the euro, which we assess at the time when we cut off the period when we do our when staff does its assessment. And underlying inflation, core inflation, this is hardly moving, and it's at around our target. So there's no point talking about the direction of travel. There's no point talking about sideways. What I'm saying is that we will be determined to deliver that 2% medium-term target. We will be looking at all data that come in. We will be deciding meeting by meeting, and we will constantly assess and reassess how we are delivering on this 2% medium-term target. Now, as to your second question, I will repeat what I have said. I have always been driven by my mandate, and I'm determined to complete my term. Period.
And the next question goes to Isabella Bufacchi of Il Sole 24 Ore. Isabella, please.
Thank you for the opportunity. I have two questions. One is on APP and PEP, in the sense that the ECB no longer reinvests the principal payments of these portfolios. Would the Governing Council have to put on hold quantitative tightening if it were to decide for a pause in interest rate cuts? Even if these no longer investments have a very small impact, keeping interest rates unchanged during QT is somehow a restrictive stance.
Once again, please click the thumbs up button. Remember, I'm going to get slapped by YouTube for streaming this, so help a brother out.
The governor of the Bank of Italy, Fabio Panetta, warned in
At
his
least
speech on the 30th
let them know it
of
was
May,
worth it.
in his concluding remarks, that the recent US depreciation raised important questions about the future structure of the international monetary system and the dominant role of the US dollar as both a reserve and a trade invoicing currency. I would be very interested to know your opinion, given your vast and very
Dude, when you need to write your question down.
in the United States. What do you think is happening now with the dollar, and also what could be the implications for us, for the role of the euro, and hopefully
Gee
also
whiz, come on,
euro-denominated
lady.
safe assets? Thank you.
That's like 4 questions in 2. So on your first question, while I appreciate that some of you would like to hear me talk about pause, hold, or whatever, I just can repeat myself that we are currently well positioned to navigate the uncertainties of the next months. And I think the risk of inconsistency anyway is not. Sorry, the risk of inconsistency of QT associated with interest rate
Does her necklace
policy,
say
which is
something?
our main tool, is probably less critical in the event that I'm not confirming here now of a pause than it is in the event of a cut. So I don't see that, but neither do I say anything about future decisions, which would only be predicated on major
What does it
shocks
say?
that we are not seeing at the moment. Now, on the role of the euro,
I mean,
I
she wore it
highly
on
regard the
purpose.
speech that was given by
What does
my
it
colleague
say?
and friend, Governor Panetta, Gentile Governatore, right? And I happen to be very much on the same page as he is. I gave a speech in Berlin about 10 days ago now, at the Hertie School of the Jacques Delors Institute, in which I tried to identify the key pillars that would need to be consolidated and further developed if the euro was to play a critical role as an international reserve currency. And my conclusion is that there is an opportunity that is opening now in order to strengthen the role of the euro as an international currency, as to take it further towards possibly the international reserve currency of choice. But my conclusion is that it is not going to be granted to us. It should not be taken as a given, and it will require in particular that member states, the Commission, the European Council make very substantive decisions that will have to do with consolidating the economic and geopolitical role of Europe, that will simplify, streamline, and develop the role of the capital market union in particular, the saving and investment union, if you will, but particularly the capital market union. And we'll have to continue to sustain the effort of making Europe a place where the rule of law is respected, where a contract is a contract, so that there is certainty on the part of the investors, of the economic actors, that Europe is actually a reliable place of business. So I think it's not a question that can be responded in yes or no. It's a fairly
is that right? In charge.
Deep debate
Very cool.
That we have touched on during the Governing Council meeting in the last 2 days, where we strongly feel that
I think she's
have
cool.
done our part, we'll continue to do our part, but we also strongly advocate in the monetary policy statement the role that authorities have to play if we want to develop in that direction, which is a window of opportunity. Now.
And now Andres Stumpf of Expansion. Andres, please.
Good afternoon, Madam President. I've noticed you're wearing the in-charge necklace. If I see correctly, I suppose it was intentional today. But going to...
Just in case of doubt, you know.
Yeah, but going to my question. So with 1.6% inflation projected by next year under your baseline scenario, won't it warrant more rate cuts for itself, regarding of it coming from the euro and the energy, and regardless of the outcome of the trade war? And second question, and I also wanted to ask about BBVA Sabadell merger, which is now being checked by the Spanish ministers. And even though it has the ECB's green light and the other one of the competition authorities, do you fear that political opposition to mergers could hamper the advances on the banking union?
It could have been different, huh?
Thank you so much. I hope you don't mind if I ask my colleague, Vice President and friend, Luis de Guindos, to address the latter part, and I would turn the floor over to you, and I'll come back to yours afterwards.
Well, thank you very much, President. Good afternoon to everyone. As you have said, we produced our report and we released our report. I think that it was almost 1 year ago. And now the antitrust authorities in Spain, they have given their opinion and the remedies that they have imposed for the deal. And now, according to the Spanish law, the government has the possibility to analyze the conditions imposed and, according to the general interest, to modify these conditions. As you can imagine, we can wait. We should wait until we have, a definitive opinion from the Spanish government. Otherwise, what we could be making is a sort of a speculation that I think that it doesn't make much sense in this moment of time.
Thank you, Vice President. And on your first question, I just want to remind you that our forecast is 2% inflation in 25, 1.6 in 26, 2% in 27. And our core inflation is even more stable than that. It's 2.4 in 25, 1.9 26, 1.9 27. Now, of course, you think, 1.6 in 26. That's exactly part of the assessment that has been produced by staff. And it's, if you
So
look
they're
at
telling you to sell oil.
as
I don't know if you're
forecasted, it's
catching
at the
that.
very low end of the range for 2027. And that's also because they take into account most recent data available, not including Q1, because I think Q1 will give us some surprises. But if you compare headline inflation and core inflation, you can see exactly where the difference lies. And that is energy prices and the value of the euro. We also have inflation, both headline and core, returning to 2%, 1.9% for core in 2027. And the cuts of today, the 25 basis points cut, is deliberately taking care of that inflation path. So we are confident of the analysis of our staff on that basis. And as I said, we will do what is necessary in order to make sure that that inflation stays at.
So retail is heavily short oil. They're too early.
Will be appropriately determined on that basis. But as I said,
It's not it's supposed to happen until July. Between now and July.
To Chelsea Delaunay of the Wall Street Journal. Chelsea, please. Yeah.
Thank you. I'm also going to ask about inflation. I mean, the narrative of the past several post-pandemic years is higher for longer, structurally higher inflation for all of these different reasons. And looking both at the core and the headline forecast and your expectation potentially for a structurally stronger euro, is that still the expectation, higher for longer for inflation and for rates? And then my second question is also about the euro. Whenever the euro goes up, people worry about how that's going to impact exporters and some of these export-dependent economies. And I'm curious if you think the Eurozone is strong enough now for a strong euro.
Is the Eurozone strong enough for a strong euro? That's your bottom line question of your second question, right? Well, you know, when I look around and reflect on the work that we have done in the last 6 years, we have a very solid labor market. Labor market where participation has
I preach to
most
teach.
recently increased.
Some of you never had this.
At rock bottom unemployment rate ever since the euro was created. The fears of recession.
Number one, born without a gun. I wasn't licensed to have one.
Only about a year ago, have not materialized. We are forecasting 0.9, 1.1, 1.3, with very limited revision to growth. The output gap closes at the end of our projection horizon. Wages have increased over the course of those years, particularly with a view to catching up with the lost purchasing power that citizens had suffered as a result of inflation. But it is now decelerating, just in line and in time, I would say, to deliver on our
in line and in time.
Medium-term target. The monetary policy is transmitting quite smoothly to the economy. Credit is up. Could be further and higher up, but credit is up. Rates are transmitting, including to corporates and mortgages. So I would say that the economy is responding quite well to our monetary policy and is delivering on that front. I would add, as I did in response to one of your colleagues earlier, that more needs to be done. And what we have seen, the Vice President and I, when participating in the finance ministers' meetings in Brussels, whether it's ECOFIN or Eurogroup, or on the occasion of Pascal Donoghue, the president of the Eurogroup, when he had dinner with us a couple of nights ago, we perceive a serious momentum to improve, to change, to simplify, to streamline, and to encourage and lock in, well, not lock in, but welcome capital into Europe. And we are seeing it. You know, the reverse Yankee bonds significant increase that we have seen in the last few weeks is a clear indication that there is trust in our system. The capital flow that we are seeing as well, whether it is European investment returning to Europe or a bit of non-European investment coming to Europe, all that is an indication that at least market forces, investors, those who move real money around, actually see value and have confidence in Europe. So that would be my answer to your second question. I'm not sure what you meant by higher for longer, because I think I have gone out of my way to say that we are in a good place and we are well positioned now, and that we will be assessing meeting by meeting on the basis of data what, if any, needs to be done in terms of appropriate monetary policy to return us to the 2% medium-term target. So I think that really sort of brings together the discussions that we've had over the last 2 days. And with that, I wish you a happy day, happy summer for those of you who live early, and see you soon.
Au revoir!
The press conference is on the 24th of July, so up until then, all the best. Thank you.
That's it. I love how they have the moderator. All right, so that was that. She ain't gonna quit. They cut interest rates. And the whole reason they're successful is oil is down and projected to be down. Drill, baby, drill. So they can thank President Trump for that, because I believe not only was that his message, but I believe he's got deals. He's doing deals with Saudi Arabia and Russia and Iran that are going to produce oil, drop oil prices, and drop inflation in the United States. I think so. He's doing it for his own reason, but I think the ECB benefits from that. Kind of interesting. Yeah. So it's kind of interesting. This is why it's international political economics, and we focus so much on that. Cool. So did we learn anything new? No, it's all on schedule. We have it all plotted at traders.com. We have projected inflation and projected interest rates for from the ECB. And the next meeting, there's not going to be a cut. And the meeting after that, there probably is going to be a cut. See, we already know all this nonsense. Cool. Now, leaving it here, seasonally, oil is up. But what did the ECB tell us over and over and over and over and over and over and over again today? They are projecting, their staff is projecting for oil to be more down than up in the near future. So, could you plausibly say, hey, if oil comes up here and then starts to give you bearishness on, let's say, a 1 hour or 4 hour chart, meaning we do something like this, could you be short for a while? Yes, you could be short for a while, because that's what the ECB projects. But to add icing to the cake, that is normal. That's right as rain. This is precisely what happens this time of year. So it wouldn't be unusual. In fact, it would be normal. Thank you for subscribing. Be normal. It'd be right as rain. So, knowing seasonality, knowing U.S. policy, knowing European monetary policy, you might be able to thread together a string of pearls that's more than a MACD on a 15-minute chart. That's all I'm saying. Cool. So if you're part of traders.com, guess what? We meet every day. This morning, we were talking about raising money and working for family offices and how family offices work. Yeah, we were supposed to do fundamentals, but somehow we did that for about 45 minutes, and it was just the community led the conversation that way. If you like that kind of stuff, you need to be part of TRADARS. Pretty simple. If you like knowing more than the reporters know at the ECB press conference, then you should be a part of TRADARS. If you like every single trade you make being based on logic and intelligence, and that you can plan things days or weeks in advance, not just minutes, then you should be a part of TRADARS. Or if you just want a male model on your team, and you're like, I don't know, he sounds like an idiot. He's beautiful. Hey, put me on your team as your economist. Leverage that Harvard degree and the other Harvard degree. So anyways, you're beautiful. That was real. I got to jump. Peace on earth. May the pips be with you. May your profits be above average. Hey, thanks for clicking that thumbs up button.